Bitcoin, I still think it's got downside after this latest bounce. I still think we actually have one more little push up, but I think it's going to 12, 13,000, maybe even lower. But when it got to 19,000, I said, you know what? I'm going to divide the amount of money that I want to put at risk in Bitcoin, and I'm going to do 1/6 at 19,000. Investor to do is to pick the tops. And there were certain signs. So the initial time Bitcoin went up in April of 2021, it was hard to pick that top. The second time for me was a little easier because you saw certain things that I would refer to as a negative divergence. And when I talk about that, I don't mean just the technicals on the chart, but you saw more hype in Bitcoin in October and November, but it was not able to really get above the highs from April. So more hype should have equaled a much bigger move through that 68, 69,000 level, but you didn't see it. And that was kind of what we would refer to as a negative indicator, a psychological negative indicator. So I think that, again, that was an easier top for me to call, even though it was the opposite for many people. As we're coming down here, I mean, you have to just say to yourself, the things I keep reminding myself of, and I am in the camp, I am long Bitcoin right now. I have some Ethereum long from right around this area. I do think we have a bigger bounce in store, maybe coinciding with the Federal Reserve on tomorrow or the GDP on Thursday. But I don't think the bottom is in yet. I haven't seen enough of that kind of washout. And I know no one wants to hear this, but you just want to cover. And I mean, all you have to do, I mean, everyone wants to believe it's a bottom, but the things that bother me is that, number one, in previous cycles, we've always seen 80 to 85% correction, right? Well, we haven't done that on Bitcoin yet. And to even make matters worse, this is the first time in Bitcoin's history where the Fed's not printing money that wouldn't think, like, if the Fed was printing money in those previous ones and it went 80 to 85%, it makes me scared to think, well, what if, could it go 90%? I mean, I don't know. And again, It's scary to think that way, but I think as an investor and a trader, you have to always prepare for the worst. And if it doesn't come, then that's fine. But you never want to think the best, because that's when you get wiped out, right? So I'm a big fan of being, like you mentioned it in your opening, how you have to be conservative and you have to be a defensive investor. And that's the way you don't blow your account up. And people that don't blow their account up, they may not make 500% a year or 3 or 2 or 100% a year. But if you look at the account of someone who's reckless versus someone who is safe, in 10 years, the safe account is way, way higher than the risky account. It's funny you say that, because I used to live in Oregon a little over a year ago, and basically right when Doge was making this crazy move and you had Elon Musk talking it up, my UPS driver delivered some packages, and he knew that I was an investor, and he's like, oh, I bought some Doge, and I'm like, you may want to just, take some profits here, but it's going to be the best. And it was right in this period. And what you say, that blue collar worker, and it's nothing against, anyone can be an investor, but what you tend to find is that investing does take time, energy, and dedication. And when people hear about it through the grapevine from their buddies or their colleagues, and they're buying it at that point in the cycle, the smart money has already got in. And then the smart money is just loving this, that they can just sell into these people that are buying in. So you have to be very aware of where you're getting your information. Oh no, one of my policies about investing, and this goes back to the safety of it, is number one, the place I get my information is the chart, right? So if you look at Dogecoin, when it, basically this is referred to as a flag pattern, right? So you'd be a buyer here if you're going to take a shot. Once this thing is even up this much, there's no way I even chase it. And does that mean that I miss out on a lot of the run? Yep. But you know what? There's a million trades coming almost every day, and I'm more than happy to miss out versus me buying it here. And what if it goes right down, back down? So for me, I'm 100% in agreement that you don't trust really anyone. You trust something that's impartial. The only thing that's impartial that doesn't have an agenda is the chart, right? I mean, it's the purest form of truth out there. And so I really just use that. And I do pay attention, like I'm fully aware of what's going on Twitter. But for me, I actually use it as kind of a contrarian viewpoint. So when I'm hearing all this buzz again about GameStop or AMC or Doge or Shiba Inu, that's where I start to mentally say, wait a minute, I've learned enough. And this is, by the way, for everyone watching, I fell into the same issues early in my career. Chasing, doing everything wrong. I just got burned enough where I started to say, wait a minute, every time I do this, it's the wrong thing. So let me think about doing the opposite. And then I started to notice it was working. And I'm like, wait, so when my gut is telling me, oh my goodness, I need to jump on, you actually look for a top. Oh yeah, this is working. You know, so it's such a cool thing, but it's a lot of self-exploration. Football player, you had basketball players taking payment, their salary in Bitcoin. Right. I mean, there was so much. I love to refer to the fact, you know, that the last Super Bowl had all these crypto commercials in it here in the US. If you go back to the .com era, the one just before the collapse, before everything got wiped out, that was the Super Bowl, the .com Super Bowl. I mean, there's so many weird similarities, but it makes a lot of sense because human psychology doesn't change, right? It's greed and it's fear, greed and fear. And it doesn't matter if you're stocks, commodities, cryptocurrencies, that's the same emotion driving up and down. Yeah, so just like that, I learned the hard way early on, and I found out that the first step in any good investor's, you know, business plan, swing trading investing, is to number one, face the fact that you're not going to always pick the bottom, right? Especially when you're bottom fishing, as they call it. So I do exactly use the term. I call it the shotgun effect, which is like, instead of picking one specific entry to throw all your money at, just spread it out in a general range. And so what I did is, you know, with Bitcoin, I still think it's got downside after this latest bounce. I still think we actually have one more little push up, but I think it's going to 12, 13,000, maybe even lower. But when it got to 19,000, I said, you know what? I'm going to divide the amount of money that I want to put at risk in Bitcoin, and I'm going to do 1/6 at 19,000. And then every 2,000 to 3,000 down, I'll just put another 1/6 in until I have a 6/6 position, right? A full position. And I agree 100% is that, you know, if it doesn't get to 12 or 13, I don't want to be sitting there with no Bitcoin at all when it runs to 100 to 500,000. So I'm more than fine on expecting to be down on from a 19,000 entry if it goes to 12 or 13, especially if I'm dollar cost averaging in. So I do that exactly. And I think it's important for investors to, you know, number one of the greatest things about that technique is it takes emotion out of it, right? Because if you go all in at one level and Bitcoin goes down 3, 4, 5, 6, 7,000, you know, your adrenaline, you're like, oh my goodness, what if it goes to 0? When I have a 1/6 position right now, I'm like, I kind of hope it goes down because I want to get more, you know, like it just takes that emotional edge because you're not investing so much capital at one shot. And it kind of gets you excited where, like, if it goes down, awesome. Now I get to accumulate a little bit more, right? So I think that's the key is the shotgun approach is the best approach. It's just the hardest one because the investor mentality is, oh my goodness, what if I only do a 1/6 and then it goes to 1,000,000? I'm losing out on so much money. But the pro approach is, let me do 1/6 because I want to protect my capital in case it goes down, right? It's a totally different mindset.
How do you break that up in even chunks? Is each sixth actually a sixth of your money, or do you?
Yeah. So that's exactly what I do. And now there's two different techniques. One is the even amount where you do 1/6, 1/6, 1/6, 1/6, or you could do, you know, 1/8, 1/4, 1/2. You know, you could do bigger buys as you get lower. For me, because again, you just never know if it's going to get to that lowest point. I've always found that doing the same amount just at a different level lower has been the best, where at least you have more exposure if it doesn't get all the way down to that last biggest buy.
Yeah. No, that makes sense. Can you tell us what we're looking at here? I'm looking at a Bitcoin triangle chart. Or ascending triangle is what I would call this.
Yeah, so basically, I mean, there's a couple things. Number one, yesterday into today, we've seen a pretty big drop in the equity markets. It's a risk-off day. We had Walmart coming out and basically warning. And I know, and this is, by the way, this is one of the things that I know your audience is primarily crypto, but as a trader who's traded stocks, commodities, and now crypto, it's important to kind of be aware of the outer world outside of crypto because it does have an influence on cryptocurrencies. And right, so we saw Walmart warning about earnings. That created kind of a risk-off atmosphere in technology stocks and in the stock market, which then brought Bitcoin down. Now, the one positive about Bitcoin is it's holding this upsloping trend line, and it's still holding the 2017 highs right here around 19,500, 700 area. So for me, I like the fact that you went from 19,000 to 24 and change in 7 days. And now we've pulled back 2, 4, 6, 7 days, and we've only given up a little over half of that gain. So I like that. I like the fact that it's holding this line. I would like to see it get back above this pivot point right here, this 21.8. But again, I'm just kind of monitoring it, but I'm still neutral to positive on Bitcoin here, as long as it holds these two lines right down here. And let's be clear, right? So, in all fairness, I'm talking swing trade move where I expect one more move up, at least touching 25.5. But let's be clear, this pattern is a bearish flag pattern. It's an in spirit of bear flag. So the midterm move, my short-term outlook is bullish. My midterm move is bearish down to 12.13. And then my long-term, years out, I continue to just think that Bitcoin becomes the more digitized gold and kind of the store of safety, BSV. I think all of these ones survive and ultimately thrive if they're in the top 20, 30. Get into it.
Let's do it.
All right, so no lines on the chart. This is just a standard chart you can see right here of BSV. When I bring this up, the first thing I'm seeing is that it looks like this pivot low and this pivot low, you could draw a straight line through that. So that's your baseline of support right here. So you want to see this at worst case, I would want to see it hold this 44.50 area. I wouldn't want to see candles close below it. You pierced it right here, but this is actually a bottoming tail. So this was a reversal signal. You can see after that, it actually traded up really, really nicely. The other thing I'm seeing here is a little bit of an upsloping trend line, which is the secondary level that I would say you want to make sure that it holds. So in terms of support, and we see the price coming down here, right around 49.5 to 50 bucks, I want to see price hold that. If it doesn't hold that, then 44.5 is your next big support. All right, now if it can hold this area, then I think you get one more move up, at least retesting this high right here around 67, which frankly is a pretty big percentage move. And then even the possibility would be, and this would be in the bull case that Bitcoin probably goes to 28,000. I think this could get up as high as around $74 to $75. But these would be your two support levels and your two resistance levels. And right now, price is getting close to support down here. So the candle is referred to basically the high to the low is the candle. In this case, it's a daily chart. So on Bitcoin, it goes 12 UTC time to 12 UTC time, 24 hours of time frame is in each candle. Now, if you go to the 10-minute chart, and I can flip over to that, this is obviously a much smaller time frame, but then each candle is 10 minutes long. So you basically get to view different time frames. And you can basically, if you're a day trader, you're probably focused more on the 10-minute chart. Swing traders usually are going to stick with the daily chart, right? Yeah. So basically, when you have this kind of line on the top here, let me zoom in a little bit more. This is called the wick, is at the top. The bottom is called the tail, and the red or green is called the body. So this would be referred to as the body, right? And basically what this is telling you is if it's a red candle, it opened here, it traded as high as the tail, it then fell, and it closed down here. So it's basically telling you what price did for that particular day. In this case, it fell down sharply. Today, you can see we opened here, we traded up a little bit, then we traded down here to the tail, and now we're currently right just above that. So it basically gives you information. I love Japanese candlesticks, which is what this is. It kind of just sets it all perfectly in alignment. I'm not a big fan of line charts or anything like that, because you just don't, you need to kind of know the highs and the lows. And like I was saying over here, this candle right here, and I know it's hard to see, but let me just zoom in here. So this tells me something, right? When you see a long tail that makes up 50% or more of the entire candle length and a close in the upper 25%, that's what in the technical world we refer to as a bottoming tail. It's a reversal signal. And I would say, to me, that says, okay, likely you're going to see a rally in price when that candle forms. And sure enough, what happens? Price rallies. Now up here, you saw this kind of doji where the tail was on the top. That's more of a bearish sign. And look at what price does. So the idea here is that by learning the Japanese candlestick formations, you get yourself to be able to predict, not with 100% certainty, but with a higher percentage probability of being correct of the next move coming.